Hey, traders and investors, welcome back to QuantifiedStrategies.com. It's election season, and you know what that means. Everyone's talking about how it's going to shake up the stock market. So today, we're diving into a big question. What are the odds the S&P 500 ends higher in an election year? Stick around, hit that like button, and let's get into it. So, does the S&P 500 typically go up when we're picking a new president? Let's look at the numbers. Since 1928, we've had 25 presidential election years. That's almost a century of data. Here's the juicy part. Out of those 25 election years, the S&P 500 ended higher than it started in 21 of them. That's an 84% chance of finishing in the green. This is based on total return, which includes stock price gains and dividends. Basically, what you'd actually make as an investor. Years like 1980, up 32%, or 2020, up 18%, despite a global pandemic, show this trend in action. Even 2024 was a banger, with a 25% gain. However, 2008 was bad, down a brutal 37% during the financial crisis, or 2000, down 9% when the dot-com bubble popped. So yeah, 84% is awesome, but it's not a guarantee, of course. So why does the S&P 500 seem to love election years? Well, there's a couple of theories. First, politicians often push for economic goodies, like tax cuts or spending, to win votes, and that can boost markets. Second, once the election's over, investors get clarity on who's in charge, and markets love certainty. So there you have it. The S&P 500 has an 84% chance of ending higher in election years. If you like this video, smash that like button, subscribe, and ring the bell so you don't miss our next deep dive into the markets and seasoned investors.